Hello, everybody. Gbenga Olatunji here. Today, we shall be looking at the regulatory environment. The regulatory environment. And under this topic, we shall be looking at the need for regulation. Why is the accountancy and auditing environment regulated? And who regulates the industry? The role of NSA, Nigerian Standard on Auditing, ISA, International Standard on Auditing, Ifac, International Federation of Accountants, under which we have IASB, also our local regulator and mother body, Ican, and the national regulator, FRC, Federal Reporting Council. We are going to examine their roles in this tutorial. Also, we will discuss communication between the auditor and the people sided with governance in the organization. We are going to examine who an expert is, who is an auditor's expert, who is management expert, and how can auditor put reliance on these experts' work shall be examined. The meaning and nature of governance in a company or organization shall be examined. What is governance? What is the nature of governance and the like? The director's responsibility. Responsibilities of the directors shall be examined. Also, we shall examine auditor's responsibility too. The responsibility of the auditor shall be examined also. Then we will move on to audit committee. What are the roles of audit committee? The composition of audit committee. Then we will discuss the expectation gap. What is expectation gap? How can we mitigate or close the expectation gap? And who are responsible for the closure of the expectation gap shall be examined. Then we'll move on to the responsibility of the auditor as to fraud, as to errors, and the like. And we will cap it all with professional skepticism. What is professional skepticism and how should auditor behave? These are the jugglers that we shall be examining today. So let us go into our slide straight away. What is regulation? What is regulation when we are talking about the regulatory environment? So what is regulation? Regulation is a guide, and we can say a regulator is a guidance. So regulation is in place to assist in guiding an environment or a workflow or a job flow. So that is what we can say a regulation is. So when we are now talking about being in a regulated environment like accountancy world, like that of the auditing, we are talking about how we ensure that the practitioner conform with at least minimum standard expected within the industry. The need for regulation of audit and assurance services. So why do we need to be regulated? After all, we are professionals. So why do we still need to regulate ourselves? We need to regulate primarily because Practitioner accountants are custodian of public interest, monetarily and otherwise. Trust is entrusted to us. We could use that word in the real sense of it. We are public, we have public interests at our disposal to defend continually. And because of this, we must be regulated. That is, ensure that everyone perform within same behavioral pattern, same work ethics to a certain degree and the like. And these are some of the reasons we need to regulate. So to protect the public interest and to ensure that auditors and accounting practitioners work within ethical boundaries, to know what is expected of us in what situation and circumstance. So these are some of the reasons we are regulated. To ensure we all conform to a standard of professional operations. That is another reason. To ensure legal aspects of our work are not overlooked. That is, we are not majoring on minors and we are not minoring on majors. So that everyone will know, okay, in this regards, what are the suitable criteria that are needed and are required to perform to a suitable standard when it comes to this aspect of work. Also, to harmonize us as a people, as a body of knowledge, to harmonize us as accountants, to harmonize our work, to harmonize our industry, to harmonize the firm of chartered accountants operations. We need to be regulated, and these are some of the reasons we are regulated. So to protect the public interest in the exam, please let this one be your first answer. To protect public interest, we are custodian of public interest. To ensure that we conform to professional ethical standard, to harmonize us, and to ensure that aspects of work are not overlooked are some of the major reasons we are So who sets the standard? Who regulates the industry? On the local level, in Nigeria, for example, Financial Reporting Council has the responsibility to regulate us. Why on the international level, Ifac has the responsibility. So on the local level, the Nigerian Standard on Auditing, which we now know under the umbrella of FRC, is to regulators. And Ifac will be using the subcommittee of IASB to form regulation. How is standard being set? What are the processes of setting standard? If standards are to be set, it must follow certain processes. If standards are to be set, it must follow certain patterns. And basically, standards could be of two forms. It could be a completely new standard, or it could be an improved upon standard. Let's take the first scenario. A new standard being set is a form of standard in which what is coming out to address had never been in existence before. every standard come out to address an issue. So therefore, when we are having a new standard, it simply means that a new issue is being discovered in the industry and we need standard around that area. The processes are almost the same as that of if were to be an improved upon standard. That is, we have standard before, but we could see that the standard setter could see that, okay, it seems that the industry had outgrown this standard and they want to modify it or improve upon it. Almost the same processes will be involved. But let's take that first example. A new standard observe first of all that, okay, there is a new trend in which no standard had addressed. So the standard setter, step one, go into their meeting hall and propose, brainstorm, gather relevant information about the new trend, and formulate a proposed regulation in the industry. And after that, they proceed to the next stage, which we call exposure draft. That is, they are exposing their proposal to the world or the interested party that standard will concern. And after they've exposed it to the society, they will allow for some time so that the concerned individuals, organization will respond to the proposal. They will comment, criticize it, say it's okay in some area. They can say, okay, let's implementation be moved forward and things like that. Then the standard setter gather the responses and go back to the drawing board and fix necessary aspects that people have concern about into the next draft. After that, they re-expose it. The exposure stage can be as many as possible until at least majority of the concerned party are okay with it. Then they pass it on to the relevant authority for consent and signature, and immediately is consented to, it becomes a binding law. Just like in year 2020, federal government of Nigeria consented to a new finance act. Before, it was a bill. So when we are talking about the exposure stages, it's at the stage of bill, but it becomes law or an act of parliament, as the case may be, when the necessary person that's supposed to sign it into law signs it into law. The same goes for the second scenario. If we were to be an improved upon area of standard to be set, they formulate and propose. Then they send the proposal out to the public for criticism, comment, and dialogue. Then they gather it, that draft, and the information, the comments of the people, and review it again. And after they've done it again, fix irrelevant criticism that they know that genuine and like, they re-expose it to the world again and again until relevant parties are a bit okay with it. Then it will be consented to. It becomes binding or an act, and it becomes a law. So this is the stages that standard we always pass through. It will pass through the proposal, the draft, exposure, re-exposure, and until it's finally consented to. So now we move on to communication with those that are charged with governance. That is, how should auditor go about communicating the deficiencies, the weaknesses observed in the internal control and the organizational procedures operations during the field work. So, who are the people that are charged with governance? Basically, the board sits at the apex of the organization, the board of directors, and authorities spiral down from the board. And the responsibility of governance lies on the shoulder of every member of the board of directors. The board should, especially for the public liability company or public interest company, as the case may be, must and should have an audit committee. For private organizations, this is not mandatory, but it is mandatory for the PLCs, as in the case of Nigeria, or public interest organization, as the case may be, to have an audit committee. And this will be a subcommittee or representative of the board of directors, especially when it concerns the auditing affair of the organization and the financial affair of the organization. So the lies between the auditor and the management, and they see to it that everything being done by the auditor, especially the internal auditor, are carried out and are being trashed out as possible, so that the organization can have maximum results and impacts from the audit work being carried out. This is to minimize the existence of audit committee, is actually to minimize friction that may happen or threats that may occur and may hinder the real significant workflow of the external auditor in form of reporting especially. So auditor, if there is audit committee, external auditor report directly to the audit committee, not the management, especially for the public interest organization. Audit committee must be reported to. It is important that we should know that every communication must be in writing. As professional, reporting is key to us. We must report in writing, communicate our findings, letter of weakness, management control reports, and the like in writing. Even though there may be communication in form of oral, verbatim, discussion, and the like, but after all said and done, auditor practitioner must ensure they go back and put something down, pen and paper, then send to the people charged with governance. Let's move on to the composition of the audit committee. The composition of the audit committee, especially in Nigeria, CAMA stipulated that the maximum composition of an audit committee is 6 members. 6 members to the maximum. And 2 interests must be represented in the audit committee membership. The interest of the management and the interest of the shareholder. The interest of the shareholder must be protected, and those that have done the work must be available too within the membership of the committee. So therefore, we can say the minimum of audit committee will be 2. It could be 4 and it could be 6. Also, it is important for us to know that the members of the audit committee, it's important to us to know that they do not need to be all financial people. Financial literacy is not compulsory for all of them, but the law says that at least one person must be financially literate and financially sound when it comes to the financial world, and must be part of the audit committee. It should be of interest that even though the accountants and the financial people, employees of organization, prepares the financials, it is important for us to know that it is the responsibility of the people charged with governance, especially the directors. It's directors' responsibility to ensure that financials are being prepared. And that is why they have to have assertions when it comes to audit work, directors' assertions. So even though other people may help in preparation of the financials, we have the accountant, the CFO, and the like, but these people are only helping. The responsibility of the preparation of the financial statement still lies on the head of that of the directors. Now let us move on to using the work of an expert. Using the work of an expert. An auditor could use and rely on the work of another professional, especially in the area or in areas in which our knowledge is little or even little to nothing, because we cannot know everything. So we must rely on other body of knowledge to do their work, especially as it relates to the audit assignment. We have to express our opinion. So how should we go about putting reliance on the work of an expert? Let's first of all clarify that there are 2 types of experts that we can find in our syllabus. We have the management experts and the auditors experts. Having defined who an expert is, that an expert, he is someone that has competence in another area and belongs to another body of knowledge, that is being certificated by another body of knowledge for competence and ability to deliver and perform. So when an auditor engage an expert to render a service, let's say valuation or revaluation of a building, that kind of expert, let's say estate valuer and the like, is an auditor's expert. Why? Simply because auditor engaged him or her. But it becomes a management expert immediately if is the company or the client that employ the service and engage that expert. So the difference between a management expert and an auditor's expert is who engage who. Who engage who is the difference between if an expert will be management expert or auditor's expert. So how now can we put reliance as external auditor and practitioner on the work of an expert? First of all, if you follow me about the definition of who an expert is, say expert must belong to a body of knowledge, and one of the primary responsibility of body of knowledge is to certify a person for professionalism and to ensure that that person have undergone series of training that is required for performance on the field and relevant knowledge required in that industry. So having been certificated, we can say an expert could do his work, and that is one of the things that auditor must rely on. That okay, this person has been certificated, he or she belongs to a body of knowledge in the regards in which we have engaged his or her service. Also, auditor must ensure that that expert has a track record. That is, they must have been in the industry for a while and they have like their list of clients they've done before.